Assalamualaikum and hello everyone. Today I have the pleasure of introducing a highly talented and dynamic group of individuals who will be presenting to you shortly. This group has put in tremendous efforts and countless hours of preparation to deliver a presentation that is not only informative but also engaging and thought-provoking. Allow me to introduce myself. My name is SITI MAISARAH binti HUSSIN 294712. So today, I want to introduce you about company that we already chose for this assignment, which is Alam Maritim Resources BERHAD and ASTRO Malaysia Holding BERHAD. So, do you know about Alam Maritim Resources BERHAD? Alam Maritim Resources BERHAD (AMRB) is an investment holding company with subsidiaries mainly. This company was established on 15 July 1996. It involved in the provision of marine transportation support services, marine construction-related services, subsea engineering, and offshore pipeline installation, which is designing, manufacturing, and operating of remotely operated vehicle ROV services, ship repair and maintenance services. AMRB is listed on the main board of Bursa Malaysia Securities BERHAD since 20 July 2006.
A financial and accounting liquidity ratio refers to a set of financial metrics used to assess a company's ability to meet its short-term financial obligations and the ease with which it can convert its assets into cash and fulfill those obligations. This ratio provides insight into a company's liquidity position and its ability to manage cash flow effectively. The most commonly used liquidity ratio include the current ratio and quick ratio. Current ratio is calculated by dividing a company's current assets and by its current liabilities. The current assets typically include cash, accounts receivable, inventory, and other assets expected to be converted into cash within a year. Current liabilities include comparable expenses and other short-term obligations. The current ratio indicates the company's ability to cover its short-term liabilities with its short-term asset. Quick ratio is a more stringent measure of liquidity, as it excludes inventory from current assets. It is calculated by dividing a company's quick asset by its current liability. Quick assets usually include cash equivalents, marketable securities, and account receivable. The quick ratio provides a more conservative estimate of a company's ability to meet its short obligations without relying on inventory sales. Liquidity ratios are important for investor creditors and analysts as they help assess a company's short-term financial health, its ability to pay its debt promptly, and the overall risk associated with its liquidity position.
Assalamualaikum. Hello, my name is IZZAH QONITA and my metric number is 290908. And let me continue to explain my part, which is the activity ratio. Activity ratio are essential financial metrics that showcase how efficient companies manage these aspects of their operation while driving sales. A well-managed organization minimizes its use of receivable, inventory, and fixed asset while still generating the largest possible amount of revenue. Activity ratio holds significant value when it comes to comprehensively analyzing the performance of the company over time by means of horizontal statements analysis. In order to see better corporate financial, this analysis was done on companies such as Alam Maritim Resources BERHAD and ASTRO Malaysia Holding BERHAD in 2022. Total assets refer to all assets that are reported on company's balance sheet. It measures a company's efficiency in generating sales relative to total assets. Total asset turnover is calculated by dividing a company's net sales by its average to assets. The resulting ratio reveals how efficiently a company utilizes its assets to generate revenue. Here we have two companies, which is ASTRO Malaysia Holdings BERHAD and Alam Maritim Resource BERHAD. First, the total asset turnover of ASTRO. Here we have 4,175,480 ringgit for the net sales, and for the average total asset is 5,555,006.5 ringgit. So the total asset turnover for ASTRO company is 0.75 ringgit. Meanwhile, the total asset turnover of Alam Maritim, here we have 300,271,092 ringgit for the net sales, and for the average total assets is 318,075,930 ringgit. So the total asset turnover for ASTRO company is 0.94. Base for the calculation before means that both companies still does not have good efficient performance of the business because the number of ratio is still under 1. Some consequences might happen, such as financial instability, decreased investor confidence, and many more. To address those consequences, company must evaluate their assets portfolio and identify underperforming assets. Moving on to the account receivable turnover. Account receivable turnover is a financial ratio that measures how quickly a company collects payments from the customers. It indicates the efficiency of a company's credit policies and effectiveness of the accounts receivable management. The formula for calculating accounts receivable turnover is net credit sales divided to average accounts receivable. Now, let's calculate the account receivable turnover of the ASTRO Malaysia Holdings BERHAD. The net credit sales for this company is 16,953 ringgit, and the average account receivable is 173,963.5 ringgit. So the total account receivable turnover is 0.09. Next, the Alam Maritim Resource BERHAD. The net credit sales for this company is 9,204,826 ringgit, and the average account receivable is 72,753,462.5. So the total account receivable turnover is 0.1. From the calculation above, conclude that both companies still have low account receivable ratio. That means both company is taking a longer time to collect payment from its customer, which will cause potential issues with credit management and customer payment behavior. Some strategies that both companies must do are evaluate their credit worthiness of customer before extending credit, and both companies must improve their account receivable ratio, which can enhance the cash flow of the company and improve the overall finance health of the company. In addition, they must reduce the risk of bad debts.
Now I will continue the presentation. Before that, I want to introduce myself. My name is EZLYN WAHIDA binti ZAKARIA, metric number 285365. Today, I will discuss about profitability ratio. Profitability ratio are a type of a financial indicator that is used to evaluate the ability of an organization to generate profit compared to its revenue, operation costs, balance sheet asset, or shareholder equity over time, and utilizing data from a single point in time. They are among the most often used measure in financial analysis because profitability ratio can provide insight into a company's financial health and performance. In this research, profitability ratio consists of two components, namely profit margin on sales and return on common shareholder equity. Now we move to the profit margin on sale. The profit margin on sale is the percentage of net income or profit generated from sale revenue. It shows the percentage of net sale revenue remaining after deducting operational expenditure, amortization, income tax, interest and depreciation. It is also referred to as the net income margin, the net margin or the return on sale ratio. Profit margin is typically calculated by dividing a company net income by its net sale. Profit margin is important to a firm since a positive net profit margin reflects the company's excellent financial health. Similarly, a diminishing net profit margin indicates that present practice must be reviewed and profitability forecasted appropriately. The research was conducted on Alam Maritim Resource BERHAD and ASTRO Malaysia Holding BERHAD. In 2022, total profit of Alam Maritim Resource BERHAD, which is RM1.435 million, higher than ASTRO Malaysia Holding BERHAD, which is RM0.1104 million. It means that for every million of sales generated by Alam Maritim and ASTRO, the company keep RM1.435 and RM0.1104 million as profit. The highest value of Alam Maritim Resource BERHAD demonstrate the company ability to control expenses, which become critical for investors to assess the extent of the company management and operation performance. In other words, Syarikat Alam Maritim is more profitable than ASTRO Malaysia. Last but not least, I will continue with the return on common shareholder equity. The return on common shareholder equity ratio illustrates how much money is returned to the owner as a percentage of the money they invested or keep in the firm. Firms that having a greater return on equity are more efficient at generating cash flow. In general, investors are more confident in firms with a higher and sustained return on common shareholder equity than in growth-oriented company that cannot sustain expanding return on common stock. The value of return on common shareholder equity of Alam Maritim is RM2.6034 million, while ASTRO Malaysia is negative RM1.8075 million. This indicates that the Alam Maritim company return on common shareholder equity in 2022 is higher than ASTRO Malaysia, which was negative. The highest value of common shareholder equity attract many investors who wish to engage in the Alam Maritim compared to ASTRO Malaysia. Investors are constantly seeking for firms with the higher return and growth on common equity. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is ISMAIZZAH binti RIDZUAN. My matric number is 289700. I will continue to the leverage ratio for Alam Maritim Resources BERHAD and ASTRO Malaysia Holding BERHAD. Leverage ratio is defined as one of financial measurement that evaluates a company's ability to meet its financial obligation. The primary objective of using this leverage ratio in companies to determine the amount of debt owed by the particular companies and to conclude whether they are able to settle the debt before the due. There are two leverage ratios used in these studies, which is debt to asset ratio and debt to equity ratio. Debt to asset ratio is calculated by total liabilities over the total asset, whereas debt to equity ratio is calculated by total debt over owner's equity. Next, based on the table above, we can make a comparison for both debt to asset and debt to equity ratio. So, we can see that Alam Maritim Resources BERHAD record a higher value while balance ASTRO Malaysia Holding BERHAD record a lower value. This shows that Alam Maritim Resources BERHAD is highly leveraged, very risky for investors and financially unstable. This company failed to gain sufficient income from its asset and its rapid growth strategy might be financed by debt. This will even lead to bankruptcy. Meanwhile, ASTRO Malaysia Holding BERHAD proved that it less risky, stable in financial position and capable of generating more income from the asset. This company never really depends on borrowing loans to do financial operation. Therefore, the chance for the bankruptcy is quite low. So, that's all for me. Thank you.
In a nutshell, there are some suggestions on how both companies, which is Alam Maritim Resources BERHAD and ASTRO Malaysia Holding BERHAD, can improve their current performance. First, they need to train and upskill employees. Investing in employee training and development is essential to improving performance. Appropriate training and skill development programs can help employees improve their efficiency, provide job satisfaction, and improve overall company productivity. Secondly, encourage innovation and creativity. By doing this, by doing encouraging innovation and creativity in a company can lead to positive change and improved performance. Companies should provide space for employees to innovate, gather new ideas, and implement change that can potentially improve processes, products, and services. And the last method is focused action. Identifying areas where company performance is weak and taking focused action is essential. Using effective project management method, identifying key issues, setting clear objectives, and managing resources wisely will help continuous improved performance. Now that we reached the end of presentation, that's all from us. Thank you. Assalamualaikum warahmatullahi wabarakatuh.